Hi guys, Max here, and I thought I'd just give you a very quick video today looking at what Ray Dalio and Jeremy Grantham have come out with and said. They recently came on and did a podcast together. It was really interesting. There are two parts to it, and I'll link the first part, which is out already, in the description down below in case you want to watch it all. But it's about an hour long, so I just selected some of the best bits or what I found really interesting, and I'm going to show you what they had to say.
One of the things I learned really 1971 and then repeatedly is that surprises that happen in my lifetime happened to me. Many cases were for things that didn't happen in my lifetime but happened in prior lifetimes, such as in 1971 I was clerking on the floor of the New York Stock Exchange. August 15th, Nixon severs the relationship between gold and the dollar, so essentially defaulting. And I walked on the stock exchange. I said financial crisis, and I would expect it to be down a lot. It was up a lot. I studied history and found that the exact same thing happened in March 5th, 1933, with Roosevelt doing the same thing basically on the radio. And then I understood things better. So what happened for me over the last number of years is there are three big things that are happening in my lifetime that didn't happen. And I actually found that with research five. So the first is the amount of debt creation and monetization of that and how it's carrying through the system. The second is the amount of internal political, social, economic conflict that is now going on, and the third is the rising of a great power to challenge the existing world order and the existing world power, China, and the geopolitical in which when I was born 1949, and 4 years after the New World Order began in 45. And the United States, of course, was a much more dominant country then, had 80% of the world's gold, 50% of the world's economy, the monopoly on military power because of nuclear and all of that. And it's declined on a relative basis. And that led me to do research, which I needed to do the last 500 years of research to follow. I wanted to study the rise and decline of currencies, reserve currencies, and their empires. And I went back, and in doing that, I also discovered that their acts of nature actually had bigger effects than the first three of those, or even with the wars, because of droughts, floods, and pandemics. And I know that you really have thoughts about climate change and its effects. So I'll be interested in hearing those, because I think that's a factor. And then number five was the greatest, of course, is man's capacity to adapt and invent, because in one way or another, if you look at that, per capita income rises, living standards rise over periods of time. But these big cycles and these big events are dominant. So those are, I think almost everything can fall into those five categories, so that's how I look at it.
Just to quickly get into a few, how do you see those categories playing out right now? Is there anything specific that comes to mind?
I think that we're in a period in which there's a supply and demand for debt and credit that is because one man's debts are another man's assets. And there's a supply demand for credit that is having an effect on making us move into a stagflation kind of environment. In other words, the trade-offs between the two will become more difficult. But I think that number two influence, the political, is the most important. What I mean by that is I think we have been used to being in an environment in which economics ruled. You'd have a global economy, And those who could produce items more efficiently or cheaper would get the business, and they would raise their living standards. And other places, so it was a global competition, largely run by economic considerations, and resources would shift that way. I think we're now in that doesn't exist as much that way, and there's been a transition to an ideological allocation of resources and so on, such as the acquisition by Elon Musk of Twitter. It's not a financial transaction as much as it is for the purpose of it'll have controls. And when we have the conflicts, such as with Disney and DeSantis in Florida, and those political ideologies, it's the belief that economics has got to fall within that agenda. That'll have very big implications, I think.
I have a little trouble convincing myself that the stock market is that important, and that we live in an age where some much more important issues are playing out. And I know Ray shares that view to some considerable degree, but I view the stock market now really as a hobby. And the one thing that I have kept going is resources and climate change related investing, and also, for old time's sake, investment bubbles, since I've been doing that for 40 or 50 years. And since I find myself unexpectedly in the third great investment bubble of my career, basically in the US. So I can't avoid it. And this is a wonderful day to be having this discussion. It's not only Victory Over Hitler in Russia Day, but it's also a day where the market is showing signs of breaking down. Through yesterday, it's the worst opening of a year for the S&P since I was 1 year old in 1939. I am a pre-war baby, unlike Ray. And of course, the NASDAQ is down as we speak, 27.5% from its high, and the Russell 2000 about 23, S&P about 15.5. So it's getting to be interesting. And as we were saying before, Bitcoin from some point in the last 24 hours is down 10% to 32,000 and change. So that is getting interesting. And ARK, Kathy Wood's wonderful instrument, is back to it where it was in 2018. I'm not kidding you. It is back below this entire event now, which is quite remarkable, down 75% from its peak, as is AMC, down 75% from its peak. And the other meme stocks are in ragged disarray. So this is the real McCoy, seems to be playing out pretty close to 2000.
And I'm just wondering how you're assessing all this in the context of your research on asset bubbles.
Always considered myself a fairly serious amateur historian. And what I've done in bubble territory is I don't try and build models to explain every day, as you guys do. I focus on the four great bubbles, which are characterized by nearly hysterical behavior, really seriously weird over-optimism, which is very rare, and which are characterized by accelerated price moves on the upside, and by a weird deviation on the upside between the blue chips going up and the risky stocks going down. And that is rare as hen's teeth. It happened brilliantly in 29. It happened during the year 2000, again in spades, with the S&P X growth continuing to go up through September of 2000, and the growth stocks basically going down 50%, and the internet stocks dropping maybe 60, 70% by then. So that was spectacular. And we saw a very handsome deviation between the S&P rising last year and the Russell 2, for example, dropping quite handsomely. So there was a 20, 25 point spread on the upside. And that for me is a pretty good indicator. And I tell you what it describes. It describes Mr. Prince's, I've got to keep dancing because the music's still playing. And we understand that completely, the enormous commercial imperative of the industry to play up to and over the edge. But they're not complete idiots. And so they say, well, I've got to keep dancing, but I don't have to keep dancing with Pumatech, the most advanced stock in 99. I'm going to transfer to Coca-Cola. And I'll keep dancing off the edge, but I'll go off with Coca-Cola. And it works. The Coca-Colas may be handsomely overpriced, but in 1929 and 2000, 2001, and so on, they always go down a lot less as the bubble breaks. And that's the phenomenon that causes this very rare indicator of impending doom, which we saw last year. And so by early this year, it seemed clear to me that this was not only the real McCoy bubble, which had been clear for a year or so in terms of pricing and enthusiasm, but it had triggered this very rare indicator of impending doom. In other words, now. And so our piece of a year and a bit ago was called Waiting for the Last Dance. And our equivalent follow-up this January was Let the Wild Rumpus Begin, i.e. we're in it, dudes. And I do believe we are. And I believe the declines will be very substantial.
If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. They can help you protect your portfolio against market turmoil through fractional shares of art from world famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to iTrustCapital, a site that allows you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you think that crypto going down is a buy-in opportunity, then now is the perfect time to join iTrustCapital. Thank you all for watching. Stay stoic. Until next time.